Of the CattleUSA Daily Podcast. Today we are welcoming back Dan Gerhold with the Logic Ag marketing team. We are very excited to talk markets today, what we're kind of seeing in the markets, both domestically, internationally, things like that. We're talking herd rebuilding numbers, we're talking calf numbers, feeders, markets, fats, all the things, what we're seeing on all of the fronts. Dan takes some time today to explain a little bit more about the relationship between our high calf prices and our low prices that we're seeing in fats right now. And then he's also takes some time to explain some of that kill cow market. We're talking international markets a little bit, about the US dollar, what we're kind of seeing on all of those fronts. So let's go ahead and get into today's episode with Dan. Alrighty, welcome back to another CattleUSA Daily Podcast. Dan, take it away. I've already at this point done your intro. What are we seeing in the markets? What's going on in the world right now? I don't like the face that you're making. Please don't come at me with bad news.
Cattle looking good. I like it. I like the action in the cattle market right now. Yesterday was a big positive day. I think a lot of people woke up and realized that the feeder cattle index up in the upper 270s and the board down in the 260s was too big of a spread. So all of a sudden, everybody just flooded that thing and said, let's just buy the hell out of it. So I love the action. The strength tip, it carried over into the fat cattle market yesterday, got that thing to turn higher. You kind of got a rounding bottom going in the fat cattle market, futures-wise anyways. So that's all positive. On the other side of things, boxes seem like they want to stabilize here. And in the newsletter we send out, Friday, I touched on that I might soon start turning neutral, maybe a little bit optimistic on the boxes side of thing and on product. I was glad we got down to 310 and a touch lower last week, just because it gave those exports an opportunity to come in and buy some product, clean some of that up. We obviously know it's a global market. We need to be competitive in the world, and when you've got choice boxes at 335 and the dollar's at 107 to 108, it's going to be hard to sell product in the world. So I don't think this correction over the last 3 weeks has been bad for us. I think it got some product cleaned up.
Which is important. I mean, we need product to get cleaned up and keep things moving in the international market and stuff like that. So this week's looking good. And just so that you guys know, we are recording this Tuesday, February 25th at 3 p.m., just after 3 p.m. So we all know how quickly things can change. 3 p.m. on Tuesday. These are our thoughts and opinions on what in the heck is going on right now and all of that stuff. Just, wanted to throw that little tidbit in there.
It matters. Yeah. I mean, we didn't close on our highs today, so I would say tomorrow's, got a 50-50 shot in either direction. So we could be getting bullish right now, and all of a sudden tomorrow we're down limit. You just never know.
No,
but
you don't.
I'm glad you pointed that out.
Yeah. What else is happening? What else are we seeing? Any other highs, lows?
The other side of it that I didn't really touch on, corn's been getting hammered here lately, especially this week after, I don't know if it's a correction yet. I think only time will tell. It's hard for me to imagine we put a high in the corn market in February. The funds are plenty long there, 350,000 contracts. If they decide they want to get out, which looks like that's what's happening, the market's going to slide back because there's just not enough buyers to pick up what they're offsetting. So that was, helping the feeder cattle case yesterday. If corn continues to slide, I wouldn't be surprised at all to see feeders, hold these levels, possibly go up. Cash feeders in the barn, Lauren, are just stupid high. I mean, I am overjoyed that the cow-calf producer is finally making a lot of money. I'm overjoyed that the guys that bought calves last fall are making money. But I can't pencil anything at a break even or a profit. I mean, me as a cattle feeder, and a risk manager, I really like to be able to at least lock in a break even so that I know I'm not going to go backwards on my money. But everything I try to buy, it doesn't matter where I try to buy them, they're 150, maybe $200 a head loss. So, we've got that working against higher prices in the feeder cattle market. I think we need to see higher prices in the fats again before we push these cash feeders any higher. But I also don't think they're going to slip back. I mean, shoot, you're talking about the lowest calf inventory we've had in 60 plus years. Guys are selling fat cattle above $2. What are they going to turn around and do? What are they going to spend that money on? I mean, let's go back to the barn and buy more feeders. So prices on cash feeders should stay good. At the end of the day, we don't know what's going to upset the apple cart. You look at equities; they've had a horrible 4 days too, 4 in a row. S&P, Dow. I think the NASDAQ was leading us lower today, but I mean, maybe it's the stock market. I don't know what turns this thing over, but I guess call it the PTSD of being in the cattle business for more than a decade. I think everybody at least knows that eventually this is going to come to an end and we're going to see markets trend lower.
Yeah, 1,000%. I mean, it's just kind of, we see it all the time. It's historically, that's just the trend that we go in. And no matter what happens in the world, what causes it, like you said, what the apple's going to be on the cart, it's going to happen. So as far as like fats being low, all of that stuff right now, can you explain that a little bit more to, like, if there's anyone listening that might not fully understand what calves selling high and fat selling low means in the industry and stuff like that, as far as a market perspective goes?
The best way I've explained it, and maybe it's not even a good way, is the slinky going down the stairs, right? Once you tip the slinky over the first step, then the other end of the slinky comes and it flips over, right? If let's take me for instance, I've got probably, I'm going to say, a couple hundred head of fat cattle that are on the show list right now, ready to be sold. Last week I turned down $2. I turned down a 201 bid on one pen of them. If I would have sold those 3 weeks ago, I could have got 212, but they weren't quite ready yet. Now the question becomes, where do I sell them from here? So let's say I get those cattle sold at $2. Now I got to turn around to replace those cattle. I'm selling a 1,500 pound fat steer for $3,000 per head, and I have to go back to the barn and buy that same yearling steer back for $2,500. $500 of margin for me to finish a steer, put 600 pounds of gain on them, is not enough. So then it becomes guys spending $2,500 a head are betting on the market going higher or staying at these levels going higher. I can't fault them. It's the bullishness of the cattle feeder by nature. It's also the fact everybody wants physical inventory right now. But if we don't return profitability to that finishing side of this industry, I mean, yeah, guys sold 3 weeks ago, they were making money. Don't get me wrong. But if you bought a yearling that had a break even, let's say you bought a yearling 3 weeks ago and it had a break even at 205. We get out to those summer months and that fat cattle price isn't that high or higher. Now all of a sudden they're in the red. Their bankers asking them questions. They're not going to be able to go back to the sale barn and buy that same high price feeder again. So maybe it takes the finisher losing money on this turn, and then all of a sudden we see feeder prices soften. Maybe guys should be looking at covering those August feeder cattle that they're turning out on grass right now, because we don't know if the finishing side of this industry is going to be profitable this summer. That's going to make up a big difference of what they're willing to spend this summer to buy those replacement cattle. So once again, timing's everything.
Yeah. So I've talked about it a little bit before, that like and you just touched on it before this last part of the fact that you're seeing the lowest herd numbers that we've seen in like 60 plus years. And like, we're breaking all sorts of records out there. We do not have calf inventory right now. Like, it's just, we're seeing a lot of that right now. How is that impacting the market as well? So we're seeing really, really high calf prices right now. And so a lot of producers are like, I'm not keeping these heifers back. Goodbye, sayonara, off to the sale barn you go. They're not holding back. They're selling. So we're not seeing a herd rebuilding phase yet. And it's just kind of like this cycle. What are your thoughts? What are your thoughts?
I'm glad you brought that up. So I have mixed opinions on the matter. Starting in, I want to say October, November of last
Mm-hmm.
year, I started getting phone calls from producers wanting to, hey, what can I do? How do I protect these heifers? I want to buy heifers, breed them, make them breeding age heifers, or make them bred heifers. How can I protect them? My opinion is right now, I think there is some. Can you hear that? That dinging?
Yeah.
Sorry, I don't know how to
You're
mute
okay.
it on my computer. I don't know how to mute it. Anyways, there was definitely some building. There's some rebuilding going on. I think it's very, very regional, to be honest, though. If I look at the Midwest, specifically Minnesota, Iowa, parts of Nebraska, Missouri, those guys are the ones that are retaining heifers. They want to rebuild their herd. Why wouldn't they? They're making a
Mm-hmm.
lot of money on the cow. They have a tax problem. They made a lot of feed last year. They're they're going to they're going to be more inclined to rebuild. The other side of the equation is the guys out in the high plains are still dry. I've talked to people in eastern Montana, Wyoming, and they are still dry. They can't retain heifers yet. Until they
Mm-hmm.
start seeing that moisture, they can't see it. Those high plains, I mean, if they don't get the grass this year, there's no liquid or there's no rebuilding their herds that's going to happen. They're going to be back in more liquidation mode. Um, so I mean, it's like I say, I've got mixed emotions on it. I think it's happening to a certain degree. I don't think it's
Mm-hmm.
happening like it was back in 2014 and 2015 that caused our markets to correct 25%.
Mm-hmm.
On the To go along with that, what is that doing to our markets right now? Well, if let's say those Midwestern states want to retain those heifers, what are they doing? They're taking a heifer away from the feed yard. Now all of
Mm-hmm.
a sudden, all those feed yards have to fight each other on the other heifers that aren't getting retained and the steers. Maybe that's why our steers are and our cattle as a whole have not softened even though the board sold off. It's because the inventory is just not there. Personally, I think that's what's going on. I think
Mm-hmm.
the proof is there in
Yeah,
the
no,
market.
1,000%. I agree with that. And I think I agree with what you said on the fact that it's regional and my whole point on it, I did a podcast on it like 2 weeks ago or something like that on just my opinions on it of like it's regional and it's not happening as fast as we thought it was going to because we've seen it like you said in like 2014 and 2015 where we went through this same thing. But this time around the weather's not helping us. Like we're not getting rain, so like you said we're not having like as much grass availability, all of these other things, so people are like seeing these high calf prices. I If I'm a rancher, I can't validate keeping those calves anyway. So like I'm going to go get those good calf prices and we can't blame anyone for that. But it's also like you said, every single thing that happens within the market affects something down the line. So because we're seeing high calf prices right now, we're seeing really rough weather patterns and stuff like that, which hopefully are turning up in the spring and we're going to get some moisture. Because of all of these other factors that we can't control, we're seeing this in the fat market. We're seeing this in the kill cow market. We're seeing this in like all of these other things that are just like a trickle down the line and stuff like that too.
You brought up a great point. Kill cows. They are
Yeah.
raging higher right now. Why is
Mm-hmm.
that? I mean, goes back to a combination of how'd the bulls do last year? Did they get everybody bred? If they did, if we had a good breeding season, we had a decent winter for the most part. Some guys had a little worse, but there was a bad stretch last week. But we're moved on. Honestly, my personal opinion, if that cow's bred, unless she's a bag of bones, why wouldn't you get her to make another $2,000 calf for next year? I think that's part of it too. If the markets start trending backwards, some of those cows might come to market. Guys might be more inclined to keep that heifer, dump that cow if we see lower prices too.
Yeah, no, 1,000%. Just more on the kill cow market and stuff like that. We've seen some pretty high kill cow numbers this year and stuff like that, which I mean is good and bad in certain scenarios. It's depending on which feet you're looking at it from, which side of the coin you're on or stuff like that. But can you explain a little bit more of that market?
Never cuss the kill cow market. Never cuss the kill cow market. Long story short, your plants, your cow plants, they can switch back and forth between cows and fats. So, I mean, this last summer was a perfect example. Kill cow was drastically lower. I think it's, it's the same. Our kill numbers just aren't there because guys aren't bringing them to slaughter, to dump them. So if all of a sudden you take even just a small plant, you're aware I live in eastern Iowa. We were shipping fats all the way down to, I think it was Alabama or Georgia. There was a lot of fats that left eastern Iowa and went on a 2,000-mile haul to get to a cow kill plant that didn't have enough cows to kill, so they needed fat cattle. Mm-hmm. I've never seen that happen. Never cuss the cow mark price, kill cow price. I also don't think that's going to change here for a little bit. I mean, dairy prices are relatively strong. You're looking at $19+ milk. You're looking at that calf is worth a lot. Why would guys dump a cow they don't have to? If she's going to make them money, why would they dump them? So I don't see kill cows going away. The other side of things is look at the demand. I mean, Americans love beef. Praise baby Jesus. Americans love beef. So, I mean, why would how can the markets, everybody asks, how can the markets really fall out of bed when Americans are eating this much beef? Mm-hmm. Well, they still can, but it's helping our case right now that Americans are eating. I think per capita domestic consumption is actually going to be up, maybe a pound, maybe 2 pounds this year. So I don't know if that's because nobody trusts the government recommendations anymore when it comes to nutrition. I hope that's the reason. It's good to see strong demand. I'd love to build a long-term strong cattle market based on strong demand.
1,000%. On that, can we talk for a couple minutes about international markets and kind of what we're seeing there? You talked a little bit about box prices and stuff. What are we seeing there? And then also, I want to know your thoughts on just international demand of beef, and if you're kind of feeling like it is also on an uptrend as well, kind of like what we're seeing here domestically. Personally, I feel like we've seen maybe a little bit of an uptrend of other markets wanting more beef as a more available protein source, but I want to hear your thoughts just on all of it.
You bet. No, glad you brought it up. So when it comes to global markets, nothing matters more than price, in my opinion. Obviously, this is not a biased opinion. We've got other countries proving this opinion right. America has the best beef.
Yes.
So Japan, they love buying beef here because they want quality. Their economy has been relatively strong for a long time. They come to America more than they go to Australia or South America. They come to North America and buy our beef. They're one of our best partners when it comes to beef export sales. China is wishy-washy. To me, I've always taken the stance that China's a price buyer. We're looking at, like I said, price always matters though in the end. When you want strong export demand, you need to see lower prices because we have to be competitive with Australia. We have to be competitive with South America. Our currencies have to be in line. So it gets really hard to expect a very strong export market when, since I want to say the election, our dollar has been just on a rage. Pulling it up here. We've softened here in the last couple weeks, but, starting November, our dollar was down at 103, 104. Since then, in January, we made a push up to 109, and now we're stepping back. We're relatively at that 106 level. So you have to take currency valuations into account. Like I mentioned earlier, 335 choice boxes with a 108 or $109 is not going to get those export sales. Doesn't matter how good your beef is, price still matters. In a perfect world, the low dollar is better for the commodity world. Doesn't matter if it's corn or cattle. Having a cheap dollar lets us sell more aggressively in the world, more competitively. And at the same time, it also slows down imports. So right now we're importing more beef than we have, I think, since 2015, 2014. It's because our beef is so high and we don't make enough here of specifically lean beef, your burger. But all of a sudden we can take our strong dollar out to the world and we can buy more of that Australian, that South American meat, ship it over here and be competitive with our kill cow prices, right? So we want that dollar to drop. It's a double-edged sword, though. You want a strong dollar because it's a strong economy, right? But yeah.
No, 1,000%. I agree with everything you said. Any other closing thoughts on the markets this week from this, like from Monday and today, Tuesday, and then maybe looking out at the rest of the week, stuff like that? Any closing thoughts on that? And then any closing thoughts on LRP things?
Don't be complacent. If you're a producer and you're listening to this, and let's say you're a cow calf or a backgrounder turning out calves on grass this summer, don't be complacent. I mean, August feeders at $275 are just a couple dollars from their all-time record highs. Folks, I don't know if you've watched the equity market the last 4 days. I don't know if it's going to matter because it's just going to turn around and go back higher. I don't know. But inevitably, I've got way too much risk in the cattle that I own to be doing nothing to manage it. Me personally, I don't want to own all that risk because this thing has a long ways to fall if it starts trending that way. Nobody knows. I can sit here and I can preach about strong demand. I can sit here and preach about lowest feeder cattle supplies in the last 60 years. It might not be anything to do with the fundamentals of this market, and this thing might turn lower. Don't be complacent. Set a floor. You know, it's simple. Throw the LRP on. You don't have to pay for it today. Walk away. Sleep at night. It's fun when you can LRP a profit. You're not gonna have to have a difficult conversation with your lender this year.
Yeah, 1,000%. I couldn't agree more. Well, Dan, as always, thank you for your time. As always, thank you all for listening to another episode of the CattleUSA Daily Podcast. We will see you all tomorrow on another one. Have a good one, y'all.